Ladies and gentlemen, what's up, traders? What's going on? Welcome back. A happy Money Monday. Welcome to a new week, a new month, a new quarter in the stock market. I am super excited for the month of April, guys. Really looking forward to seeing if we have some better market conditions, some better opportunities, some great trades, and just have a kick-ass, a kick-butt start. Gotta watch my language. Here to Q2 in the month of April, guys. So, again, welcome back. Happy Money Monday. Hit your boy with a big ol' good morning. And then we'll officially dive into it. The pre-market rundown. Taking this time to get y'all prepared for today. Talking about my top stocks. Talking about the opportunities that I see and how I'm looking to navigate this market. And lock in some profits. And start the month of April and Q2 strong and profitable. So hit me with a big good morning if you guys are inside of chat right now. If you guys are over on YouTube for the pre-market rundown, go ahead and drop your location. Where are you tuning in from? And then go ahead and hit me with a big ol' good freaking morning as well. All right, we'll go ahead and dive into it here in a moment. We don't have really a lot to discuss today. We got the SPY. We got QQQ as always. Going to be looking at Tesla for today. Possible day trade that can turn into a great swing trade as well. And we got a couple penny stocks, right? That'll only take about 10-15 minutes to get you guys up and running, prepared for the day. So make sure that if you have any stocks on your watch list that you want reviewed, get those posted inside of the coaching Q&A room so I can see those. And again, just make sure that we have some time to review your top stocks for today. Inside the chat, who do we got rocking with us this morning? Shannon, good morning. Julie, Zach, Michael, Chelsea, Aaron, Johnny, Stir, Trader Adam, Lucian, Trucker Ed, Marcus, Felicia. I'm running out of breath. What's up, David? Good morning, everybody. Hopefully you guys had a wonderful, wonderful Easter. And I hope you guys are having a great, great start to today. So after the rundown, I'm going to drop the streams just so you guys know. And I'm probably going to take this week off. From the market. So, I mean, I'll have the stream open for you guys and make sure that the scanners are up. But after, like 9:30, I'm probably going to just, cut out and probably won't be back the rest of this week. I just don't really feel like being here. After all that excitement, I'm like, you know what? I just don't want to be here anymore. So I'm going to take the week off, guys. If you guys are cool with that, great. If not, it is what it is. So April Fools, ladies and gentlemen. That wasn't as good as Stirs. Stirs was a lot better. But, it's really hard to follow that lead. So I tried a little bit. But we're ready to rock and roll, guys. Let's kick it off and start getting y'all prepared. But before we do that, who we got over on YouTube right now? We got Rob from Michigan. What's up? Vincent, Benny B. What's up, Benny? Welcome back, man. Vincent again. Let's get it. We got M and then Mario Ruiz inside of the chats over on YouTube. What's up, everybody? Good morning again. All right, let's not waste any time. Yeah, Stirs was really good. Yeah, mine was terrible, right? What was Stirs? He was like, hey, I don't want to be here anymore. You guys can go, basically get the bird. Yeah, I just don't want to be here. It was great. Love it, man. All right, let's dive into it. What do we got going on the economic calendar for today? There's only one key thing that we have to be super mindful of, and that's going to be ISM manufacturing PMI data that drops here today at 10 a.m., right? So you got a couple things to be mindful of, but the biggest piece of key data is at 10 o'clock. That's ISM manufacturing PMI. All right. But 9:45, you do have S&P Global manufacturing PMI data that will be dropping here at 9:45. Just be mindful of that. You do have ISM manufacturing employment data here at 10 o'clock, but that key piece of data that's dropping at 10 once again, is ISM Manufacturing PMI, right? So just be mindful that at 9:45 and at 10 o'clock, we got some data that could absolutely move the market. If you guys are in a trade, just be mindful of that. Put some hard stops in. Have your finger on the trigger, ready to get out of a trade if it goes against you. Just again, be mindful that if you have a trade open, mitigate your risk. If you're thinking about getting into a trade at 9:59, might as well just hold off for an extra couple of minutes and see how data reacts the market. See how market reacts to the data, I should say, right? So that's what to expect for today, ladies and gentlemen. 9:45, 10 o'clock data. After that, you are pretty much in the clear, okay? So let's talk about what we got going on today with the SPY. And the SPY is actually back below the only data, like the only daily resistance point that we have. So if we really look at the daily, we know that we have the all-time high as resistance, which is Friday's high a day. Friday's high a day is actually up at 524.61. So we got all-time high resistance, and that's the only data point that you really have when you look at the daily. So drill down to a lower time frame, right? Look at your 4-hour, look at your 1-hour, drill it back down even to a 30-minute, and see if there's anything else that really stands out to you, right? I can run a line of resistance off all-time highs, but when I drill down to a 1-hour time frame, I actually have a zone of overhead resistance, right? And I like to identify key zones of support resistance, not just single lines, right? So we can see that we have on the 1-hour time frame, we have this 1-hour candle body close in the high, followed by the next hourly candle open and high before that nice big drop. So that gives us this zone of overhead resistance, okay? And so that zone is going to be between 524.46 and 524.62. That's going to be some key overhead resistance, okay? That's going to be a key level that I'm watching today, right? Could be one of my lines in the sand, because that's really going to be the make or break on, do we have good long opportunity at the start of the day, or do we have better short opportunity at the start of the day, right? And so let's just go ahead and break down a couple game plans off that key zone of daily resistance, okay? If we were to come up and back test that zone as intraday resistance, and if we fail to break above it, pretty simple. I would just look to get short down into our next daily zone of support. That zone's going to be down here between 522.93 and 523.05, right? So again, that would give us about, what is that? About $1.50 potential downside from zone of resistance into key zone of daily support. And so if we just come up and back test that zone and we fail to break above it and we see a clear-cut opportunity to get short off that zone, I simply want to be looking to get involved in put contracts for that potential leg down into that next daily lower zone of support. Once again, that's going to be down between 522.93 and 523.05, okay? To the flip side, right? Again, I don't like to be biased. I always want to have an opposite plan in place just in case. Because who's to say we get the short, right? What if the SPY gets back above that zone and we regain it as support and we see that buyers are present? We're back above that zone holding as great intraday support. Well, from there, I would just want to get long, right? Where to? Well, the only real data point that we have to get long to in our next area of resistance is just going to be all that pre-market resistance that we had, right? Because if we break that zone and regain it, hold above it, that means we're hitting new all-time highs intraday. And so where could we go? The sky's the limit. Look left, the only data point that you have to gauge, hey, where could we go to? Where's a great area to lock in profit? It's just going to be where we had a lot of that pre-market traffic this morning here in pre-market, right? So that would put you up into like the mid 525s. Call it 525.50 up towards around like 525.60. That would give us maybe $1 of upside into those pre-market highs. Okay, so that's going to be your long plan, depending on what the SPY does, off that key zone of what right now is probably going to be resistance since we're below it. Okay, but if we get above it, regain it, and hold above it, that's going to give us opportunity to get long for about a $1 move to the upside. right? And that's how you remove bias, right? So you don't come in with a bullish bias or bearish bias and you're only looking for one side of the trade. Who cares where the market goes? I don't care if the market rips 10 points today. I don't care if the market dumps 10 points today, right? As a day trader, I just want to be on the right side of the trade, right? So I want to remove my bias so I can make sure I'm always on the right side of the trade because we have no idea where the market's going, right? We don't know if the market's going to sit sideways in the 50-cent range. We don't know if we're ripping or dumping today. We have no idea. So come in and remove the bias, all right, by simply looking at both sides of the trade, okay? And so that's what I've done, right? We have a long plan in place for today. We have a short plan in place for today. It's that simple. Now we just got to sit back, wait for the market to open, and wait for the market to come to us and present us with an opportunity to either get long or get short or just be completely hands off, right? So that's going to be the game plan for today. And again, we do have a pretty good lower zone of support that we may come down to first. We may not have an opportunity to get short for the leg down. We may open and just start dropping on off into that lower zone of daily support. If we see that take place and we have an opportunity to present itself to get long off that lower zone of support, hey, let's simply look to get long off that lower zone of support for the next leg on up, okay? So realistically, guys, just focus on those two key levels at market open, right? Overhead resistance, 524.46 to 524.62. Lower daily zone of support between 522.93 and 523.05. Just focus on those two levels at market open, and we'll go from there, and we'll see what we have at 9:30, okay? Let's dive into the Qs, right? Q. You're sitting off a pretty key level right now at this point in time here in pre-market. And that key level of potential support, since we're trying to hold above it, that zone is between 444.98 and 445.10, right? That's your line in the sand. That's going to be your make or break here on QQQ right at market open, right? If we're able to trade above it and hold above it, and we see that it's holding as really good support, we could simply look to get long for the potential next leg up into our next key daily zone of resistance. And the key daily zone of resistance that I have, that's going to be our primary level, is going to be up between 446.56 to 446.75. That gives us about $1.50 to $1.70 of upside potential into that next daily zone of key resistance, all right? But if we open on up and we just can't hold that level of support, and let's say we fall below it, or let's say we even open below it, right? And if we ever come back into this zone and back test it as resistance, and we fail to break back above it, that's going to be where I want to get short for the next leg down. And so I would see potential back down into all of this support resistance that we had from Thursday into Friday session of last week. I'm sorry, Wednesday into Thursday. I forgot Friday the market wasn't open. But from Wednesday into Thursday, we can see that we had a lot of resistance that turned into a lot of support there on Thursday. That would be the next main area of support to the downside if we see an opportunity to get short below 445, right? We could take the short down to this 443.61 to 443.76 zone, right? So that's about another, what, $1.30 to $1.40 of downside potential, okay? But it really just comes down to what are the Qs going to do off this key zone, right? Could be support, could be resistance. We really have no idea until the market opens in the next 15 minutes, right? So that's, again, between 444.98 to 445.10. If we're below that zone, holding below it as resistance, I want to get short into that lower zone of support. If we get back above that zone and regain it and hold above it as support, I simply want to play the market long into our next overhead key zone of resistance. It just comes down to what are the Qs going to do off this zone at market open, and we'll just simply go from there, guys, okay? The other stock that I have on watch today is going to be Tesla. There's a couple things that I noticed with Tesla that look pretty decent. Could be a good day trade that turns into a decent swing trade opportunity, right? Back up into the mid 180s potentially here on Tesla. And so what we have are a couple things to keep on watch. Number one is I want to watch Thursday's low of day. Because if you look at Thursday's low of day, it technically filled the gap, right? From wick to wick, we came down here on Thursday, and Thursday's low of day was off of, right, Monday's high of day, right? We had a gap from Monday into Tuesday. We came down and closed that gap here on Thursday into the high of day, into that wick, right? So if we hold this zone between 174.99 and 175.30, we could see a nice bounce and a nice push to the upside because we've already closed that gap, and we could see what we call a gap fill bounce and see some upside action today here on Tesla. But here is another area that I want you guys to keep on watch, and it's going to be the gap fill into the candle body, right? Because if we do not hold that 174.99 to 175.30, that pretty key area of support, if we can't hold it, we may see Tesla drop on down a little bit lower and close the gap into the candle body, not the wick, but the body. And so if we do close the gap into the body, we could see Tesla come down towards around 172.64 here on Tesla, okay? So I want you guys to keep both of those key areas on high watch. Okay? If we do see Tesla open, we come on down into that, key zone of support, which is the gap fill from that wick that we just discussed, there may be an opportunity to get long somewhere around this 174.99 to 175.30 for the next leg up, right? And if we do have an opportunity to get long, I want to get long, right? Because I'd also be expecting to see Tesla maybe break this multi-day downtrend from last Tuesday's high a day into last Wednesday's high a day. A lot of post-market and pre-market traffic. And then again, here in pre-market this morning, we have a lot of traffic off that trend line. And we all know that while we're under a downtrend, we are considered bearish, right? But the second we start to break through that downtrend resistance, we go from the bearish side to the bullish side. And we can see buyers really start to step on in. So that's why I'm saying it could be a great day trade that turns into a swing trade. If we get long down here off this key lower zone of support, we come on up and we break this downtrend, we could see more continuation to the upside, right? Again, a day trade opportunity that we could be positioned correctly and hold that as a swing trade to capitalize on more upside. And I could see more upside. So that's why I want to keep that on watch to see, is there an opportunity to get long off this lower zone of support up into that downtrend as resistance. And if we ever break that downtrend, I want to be in this strategically to hold this a little bit longer, maybe for a swing trade as well, as we could see more upside back into Tuesday's high a day, the mid 180s. Okay, so keep that on watch. But what if we do not hold, right, the gap level? We close the gap into the upper shadow, into the wick. But we could see the gap fill into the body. So how would I look to get positioned to take advantage of that short if it presents itself? Well, it's pretty simple. I would just want to see Tesla fail to hold that level of support that we were just discussing, right? If we see Tesla fail to hold that level of support and we see it turn resistance, I would just look to get short down to 172.64. Right? And that would be a killer short opportunity for an actual gap fill into the body. Okay? And so we would have roughly 2.5 points of potential downside. I would entertain that short. And then from there, we would go back and reanalyze the long opportunity for a possible, gap fill bounce. That could lead to a nice break of that downtrend for the next leg up. So regardless of what Tesla does, there's good opportunity, right? If we hold that lower zone of support, let's get long for a potential break of that downtrend for the next leg up. Even if we don't hold that lower zone of support and we fall below it, crack below it, and stay below it, we can get short down to a gap fill into the body. And then again, same thing. Do we hold, right, the lower end of that gap? Do we get a gap fill bounce? Are we starting to set up for a potential break of that downtrend at some point today or tomorrow? So the same idea that we have would still be valid if we come down and actually close the gap into the body. And again, the body, that 172.64. There's a couple of different ways that we can look at Tesla. right? And that's what I really like about Tesla is there's a lot of opportunity, long or short, right? So once again, the recap, long opportunity one is if we hold this lower zone of support, I want to get long into the downtrend and then ideally be positioned just in case we break that downtrend to be in this very potential swing trade for a continuation move to the upside, maybe over the next couple of days, right? So that's game plan number one on Tesla. Pretty simple stuff. Game plan number two is if we crack that zone of support, stay below it as resistance, I want to get short down the 172.64, okay? And then get out of that short position and see, are we holding that 172.64, right? And not only would that be 172.64 support off the lower end of that gap, where we could see what we call a gap fill bounce, but it's also going to be off of this multi-day uptrend, right? So if we do come down to 172.64, it's also going to be 0.3 of this multi-day uptrend that we could bounce off of. And so do we get a gap fill bounce, and do we have a trend line bounce opportunity as well? So I wouldn't be opposed to see Tesla come down to that 172.64, right? Because we could take it short down to that level, get out of the short position, and then start to think about getting long for that gap fill bounce, as well as a third point bounce off the uptrend. And then the same thing applies. Can we get in? Can we be positioned correctly? And will we eventually see a break of this downtrend for the next leg up back into the 184 to 185 region here on Tesla? Okay, so I like it. There's a couple of different ways to look at it. There's a couple long opportunities. There's a short opportunity. Again, I don't really care what Tesla does today. I just hope that it presents an opportunity for us to be able to take an awesome trade here on Tesla. So that's what I got for you guys today over on Tesla, ticker TSLA. And hopefully all of that makes sense and you guys are all set, ready to rock and roll. All right. That's all I got for you guys today. Out of the 70 to 80 stocks that I reviewed, it was really Tesla. Obviously, always the SPY and the Qs. So you guys are all set with the SPY. You guys are all set here with QQQ, the triple Q, the Q to Q. And we do have a couple great game plans here for Tesla today and possibly into the rest of this week as well, depending on what it does. All right, guys. Other than that, we got some time. Are there any stocks on your watch list that you want to review for today? Let me know. Let's go ahead and break those down. Let's review them, and let's really make sure that you guys are all set, ready to rock. But for the most part, I am good to go for the day myself, and I hope you guys are all set, ready to rock and roll as well. Okay. Yep. Looking at downside potential here on NVIDIA. Okay. Probably will. Yep. Absolutely. No, I like it for sure. Like you already came down Wednesday, Thursday, and you actually hit a little bit of a 0.3, it looks like. And you did have that slight reaction there Wednesday and the Thursday. And now you're starting to see a pretty nice defined lower high. And I like the idea of a lower high crack of that uptrend on a 0.4. So if we get a really nice solid crack and close below that uptrend, I agree with you. I think there could be some great downside. I would say first back down towards around the low 850s, right into these lows. Yeah. Yeah, I'm just looking right into these daily lows, like the low 850s, right in this region, right there. Yeah. And then there's a couple gaps, that could get filled to the downside as well. I like it, man. Good stuff. Yeah, let's keep NVIDIA on watch as well, for sure. Is it NVIDIA or NVIDIA? People hate on me all the time because I pronounce it incorrectly. NVIDIA. Oh, I was like, you almost got me. I was like, all right, NVIDIA. I say NVIDIA, but some people are like, no, it's, I say NVIDIA. People are like, no, it's NVIDIA. I'm like, whatever, does it matter? NVIDIA, Nevada, tomato. Yeah, exactly. Tomato, potato, who cares? Can we look at AMD? Yeah, brother, we got about 3 minutes. We can review that for sure. Moving forward, throw that up in Coaching QA because that's the one channel that I'm looking at during the rundown to make sure I get your stocks reviewed for you. But here's the thing on AMD. I mean, honestly, at first glance, I'm just not a fan of, the price action and how we've developed over the past, few days. And so the only thing that I see is we're stuck below the 20 EMA. We're obviously stuck below the 50 SMA, and we haven't been able to break back above it. We tried all last week to get above the 50 SMA, but we got rejected. Tried to get above it. We got rejected. Above it. Rejected. Again, here on Thursday, we tried to get above it, but we got rejected again. So we can see that we have a lot of resistance off that daily 50 SMA. And the more times we try to break it, we get rejected, eventually we're going to see some sellers step in and probably buyers give up and may be able to get that next leg to the downside. So, an idea, right? Just an idea of how we could look to trade it would be, can we fall below Thursday's low of day, right? Can we fall below the previous day's low of day and hold below it and stay below it as intraday resistance? Maybe get short for the next leg down, right? So could we get below 178.34? We'll see. And can we hold below it? It's like intraday resistance to try to get an idea of, could there be an opportunity to get short as we're just getting rejected off that daily 50 SMA? I mean, that's all that I see. Would I want to get short off the 50 SMA? No, because we do wick above it, but we close below it. So just because we hit the 50 SMA doesn't mean I'd want to get short. I would ideally like to see a strong rejection again off the 50 SMA, and then you'll see a crack below Thursday's low, retested intraday's resistance, and then say, hey, could there be an opportunity to get short? Probably. Back down to 175, then back down towards around 174, and then we could target that gap down low and that gap down open here on AMD. That'll put you right around like 173. So that's how I would watch it. That's how I would analyze it, and really have to sit back and be patient to see, can AMD get a crack below 178.34? If we see that take place, right, maybe there's an opportunity to get short for the next leg down. But right now, you got some pretty key resistance at 181.13, and that is your 50 SMA. So I'm going to be honest with you. I'm not a fan of the overall daily chart. And if I'm not a fan of what I see on the daily, I typically don't drill down to my lower time frames to identify a day trade opportunity, right? It's got to really stand out to me at first glance on the daily. And if not, I usually pass. So at first glance, I'm not a fan of it, but I'm going to set my bias aside, right? And just go ahead and break it down. And that's basically what we have for today, and a couple areas to keep on watch. Now we just got to see, is there an opportunity that's setting up intraday here? But we are all set, ready to rock and roll. Market will be opening on up here in about 20 seconds, ladies and gentlemen. So let's have an awesome day. Let's crush it. Let's have some fun, and let's start the month, the week, and the quarter strong and profitable, baby. So let's get with it. Let's have some fun. Let's make it happen. Get the scanners live. You guys are on YouTube. Appreciate you guys tuning in today for the pre-market rundown. We do these every single morning from 9 a.m. to 9:30. So make sure you guys are back here bright and early tomorrow morning at 9 a.m. for the pre-market rundown. Take care. Stay blessed. Enjoy your day. Make it happen. And again, everybody on YouTube, I will see you back here tomorrow morning, 9 a.m. Like my trading view just froze a little bit. What's up? So funny. But it's like, yeah, you guys should use it. And then every day I have an issue with it. Yeah.